Welcome to Traders Corner. Joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it was a bit of a harrowing week for the portfolio and possibly for you last week, having to explain a series of losses.
Yeah.
But let's move on and look at the S&P 500, which is kind of grinding higher. And I wonder if it's going to get to that 2,500 level, because that would be a magnet, wouldn't it, for where it is now?
Yeah, it certainly would be. It's quite close. We're sitting at about 2480 on the S&P 500 now. So 2,500 is only 20 points away. It's less than 1% away from where the trading action is currently. The chart of the S&P 500 is up on the screen at the moment, and you can see it there quite clearly. We've spoken about the significance of this 2,400 level on many occasions, and the fact that that breakout through that level was quite bullish. And it's continued to move higher. And you can see, though, over the last 3 weeks or so, this market's mainly been moving sideways. Very narrow trading ranges on most of the days. And actually, if you look at the daily closes from one day to the next, this market has hardly moved by more than 0.5% from day to day for like 3 weeks in a row now. So it's been very, very dull trade, as it were. But the fact that we've got these long tails to the downside on the candlestick patterns over here on these daily candles does suggest that there is buying activity happening at the lower levels. And you could make a case that there's a little triangle pattern that has formed over there now. So if this S&P 500 were to actually break out above 2480, then I think it probably is then just a hop and a skip to get to 2500, to that big round number. If, on the other hand, it did break below the bottom of that triangle pattern, then this upward trend comes in at about 2450, and you can see there's a fair amount of lateral support there as well. So we watch that triangle pattern to see which way this market breaks, but I think the higher probability outcome probably is for an upside break here.
Which, of course, is not good for the portfolio, but your losses are capped at that premium that you paid, which was the cost of the options that you took out against the S&P falling.
Yes.
So it would be $240.
Yeah, that's right. You can see the payoff profile of our put spread option structure on the right-hand side here. Above 2430, we pay our premium of $240 away. And look, I mean, at the time I did this trade, it looked decent, where a move below 2430 looked plausible. But you know, this thing expires in the middle of September, or I think in the third week of September. So it's still got about 6 weeks to run until expiry. So anything is still possible during that time. And as we sit here right now, it looks unlikely that that structure is going to end in the money for us. But you know, 6 weeks in the market can be a long time, and anything's possible. So I wouldn't rule it out entirely, right, at this stage. But if I'm honest, it's looking more likely that we would probably lose our premium of $240 and probably not see the benefits of the structure here. But let's see. Like I say, 6 weeks in the market can be a long time.
Yeah. What about our own market? That will also be quite an interesting 6 week period to watch, because there's also a structure there, but unfortunately this is out of the money at this point, thanks to a phenomenal 5 weeks or so? Yeah,
about 5-6 weeks. Basically, since the middle of June, this top 40 index has gone up pretty much in a straight line. It's gone up by over 10% in a straight line without any significant pullbacks at all. A couple of false reversals along the way up, which would have got the bears excited, but only to then squeeze them out further. This has been a phenomenal short squeeze in our market. And I say a short squeeze, I mean, it's also been driven by, it's been fairly broad-based in terms of the heavyweight stocks in our market. So Naspers has been strong, that's the biggest stock. But Richemont has also been strong. BHP Billiton's been strong. British American Tobacco did get a bit of a smack the other day on some regulatory concerns, but it seems to have rallied back and recovered its losses. So, you know, it hasn't just been about one stock that has had been the case earlier this year. You've actually had a fairly broad participation among the heavyweight stocks in our index that have dragged this market up over the last couple of weeks or so. Being short here has definitely been the pain trade. And fortunately, you know, we are not short. We're not naked short in this. And this is one of the beauties of having these option structures the way I do them, is that we don't sit here, you know, being squeezed out of the market as it goes higher and higher. We know what our premium loss is. We stand to lose 2,300 Rand in options premium on this put spread structure over here. If the market were to fall to 46,000, we can make a maximum profit of 17,500 Rand there. Anywhere below 48,000, we start making some money on this trade. we're sitting now, the market actually touched 50,000 this morning, and it seems as if it might be reversing back down from that level at this point in time. But again, we've got another 6.5 weeks of waiting on this thing. It's not impossible that it might still go back into the money for us.
Yeah.
If it doesn't, we lose our premium of 2,300 Rand. That's not the end of the world. We can live with that. What is, however, frustrating is the fact that back in June, when the market was down at 45,000, we were looking very good in terms of a theoretical profit on this structure. And this is the difficulty, is we kind of need to run it out to expiry before we can really realize and lock in the profits on these things. So to see this big rally has been disappointing from that perspective, because the profits that we were sort of seeing, but the theoretical profits that we were seeing have now been, they've evaporated.
Yeah, and of course the other disappointment is that you were long actually, to sort of, you know, you traded against the structure and cut that out, and that was clearly way too soon.
Yes, that's right. I did go long against the structure with just a couple of ALMI futures, looking for a bit of a rally and knowing that we were hedged at the bottom. But you know, at the time, I certainly didn't think that we would see a 5,000 point gain in the market. So it never even crossed my mind to want to hold on to those long trades in the ALMI futures for this long.
Yeah.
So a bit of a mess all round, but you know, not a disaster. Let's put it that way. I mean, we always go into these structures knowing one of the possible outcomes is we lose our premium.
Yeah.
If that's the case, then so be it.
Garth, the other big unknown as we sit here, so we are recording the show this afternoon, is of course the votes, the motion of no confidence, and we don't know what the outcome is of that yet. And presumably it could be quite profound if it is. Well, I don't know. You saw the Rand on Monday trade incredibly strongly after the announcement that it would be a secret ballot. So if it goes Jacob Zuma's way today, I guess the Rand will go all the way back. And that has implications for the market, doesn't it?
Yeah, well, it certainly does have implications for the market. You're absolutely right. And it's 3 o'clock in the afternoon now we're recording this. So probably by the time this goes out tonight on the show, we will know what the results of the secret ballot, the vote is. But I think, to me, the whole scenario is kind of an asymmetric risk at the moment. What I mean by that is that the result of this motion of no confidence vote will be most easily and clearly and quickly felt in the currency market and the bond market. And the market broadly is expecting that Zuma is going to survive this vote. So if he does survive, then maybe the Rand weakens a little bit, maybe it weakens by 1% or something like that. However, if the motion were to pass, then I think you could quite feasibly see the Rand strengthening substantially, like 5% or more. So what that means is you've got an asymmetric risk. And if you really forced me to take a trade, which I know you're not going to do, thank you, but if you forced me to...
Well, now that you offer me the option.
If you forced me to take a trade based on the outcome of this motion of no confidence vote, I'd probably go long the Rand, because I think the likelihood of you making a lot of money there is quite good versus the likelihood of losing a little bit of money if he survives. It's an asymmetric risk. That's what I'm saying. But the point is, we're not here to gamble on this show. We're not in the guessing game. So we're not going to take a trade based on that. Not locally anyway. We're doing an offshore trade this week.
Yeah.
But I'm certainly not willing to take a trade locally because there's such an unknown.
And as far as the equity market is concerned, it may also have a big impact, because if he doesn't survive the vote, the Rand strengthens, you are probably going to see a lot of profit taking in the Rand hedges.
Correct. Our top 40 index is heavily skewed towards Rand hedge stocks. So you're right. If the Rand strengthens substantially, then this top 40 will come down. I'm pretty sure of that.
Yeah, okay. So the trade this week is on the offshore portfolio, which hasn't been very active.
Yeah.
And it's a trade in Unilever. Tell us why.
Yeah, it's a trade in Unilever. It's one of the world's biggest consumer goods companies. If you look in your kitchen and your bathroom, you'll probably be surprised to see how many products actually have that little Unilever label on the back of them. It's a huge, huge global company. And what I like about the stock, technically, and the main reason is a technical reason, other than the fact that I do like the stock. Fundamentally, it's a phenomenal global business. But if I look at the technicals on this one, you can see it's actually bumping up against some overhead resistance here at £44. This upward trend that I've drawn in there goes back to January of this year, and you can see the stock has touched that trend line a couple of times throughout the year. It's recently pulled back to that trend line and to the 50-day moving average and has moved up off that area now. And it's now having a go at this overhead resistance level at £44 here. I just want to zoom in on that dotted boxed area so that we can see a little bit more clearly the more recent trading action. So here we've got 3 months worth of trading history. There you can see an inverted head and shoulders pattern quite clearly, with the neckline being at £44 over there. So each time it's bumped up against £44, it's struggled to push through. But the fact that we're breaking higher now looks to me like it's quite feasible that we could actually see a breakout through the top of that neckline there, through £44. There's also a bull flag pattern that's forming with the right shoulder over there. So typically we would take the height of that structure over there and project that distance up, and it gives us a target of about £46 if we do see a breakout through £44. So I'm quite comfortable to take a trade on that basis. I've actually gone into the trade already and bought on the breakout above the top of this bull flag structure, and it looks like it is on its way now. So we've gone in at £43.50, stop loss is £42.50, and we are looking for a target here of £46.
Garth, just to, I mean, you know, there's always a way of looking at charts. So that inverted head and shoulders is quite clear, but you could also say, well, maybe there's a double top that's formed.
Yeah, not really. You know, a double top you can only really say it's a double top once it goes below the midpoint. So in other words, if you said that this is a double top at £44, what would have to happen is it would need to go below this area at about £41, and then you could only say, well, now we have a confirmed double top in place. So at this stage, I would place more emphasis on the inverted head and shoulder structure here rather than a double top.
Okay, so take us through the mechanics of the trade in more detail.
All right, so we're long at £43.50 with a stop at £42.50. The risk per share, therefore, is £1 per share. I'm risking £140. So we've got £9,300 odd in our offshore account at the moment. I'm risking 1.5% of that, which equates to £140. I take the risk of £140 and I divide it by our risk per share of £1, and that gives me a number of 140 CFDs that I can trade. The target, we're looking at £46 here, and my risk to reward ratio therefore is 1 to 2.5.
And of course, I suppose the beauty about trading offshore portfolios is that there is, well, certainly no rand currency fluctuations that is likely to hit you, which is something that, as we've already spoken about this evening, is something we're going to have to bear in mind locally. Yeah,
that's right, and that's one of the reasons why I've chosen to do an offshore trade this week rather than a local trade, because Unilever is a massive global company. It's listed in London. It's got very, 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 very little bearing of what happens in our motion of no confidence here today. So I kind of want to stay away from the local market at the moment because there are too many unknowns. But I do think that this is a valid trade setup looking at it on the offshore portfolio, and quite honestly, it's about time we did something on that offshore portfolio anyway. It's been a bit quiet of late.
Yeah, okay, well, let's have a look at how those portfolios stack up.
Right, so here's our local portfolio in rands. You can see still up 4% and a bit for the year to date, so slow going here. The trade that we still have open at the moment is this options put spread structure, which runs out to the 21st of September. The other two trades, we lost a bit of money on Barlow World, which we reported back on last week, and we made some money on some Orme futures a few weeks before that. But at the moment, really, our only exposure on this local portfolio right now is in our put spread option structure. Then on our offshore portfolio, we've still got an option structure on the S&P 500. There you can see with a premium of £240 having been accounted for. And then we've got this new trade on Unilever where we're long of 140 CFDs. So we're still struggling on the offshore portfolio. You can still see down 6.7% there for the year to date. It's been difficult, and the year is sort of rapidly, the end of the year is rapidly approaching. So I need to do something interesting on this portfolio to come out on the right side this year.
Pull a few rabbits out in the last quarter of the year. Garth, to wrap up then, you've got a couple of, you've got one course later this month.
Yes, on the 19th of August, I'm in Johannesburg doing a high probability trading course. So anyone that would like to attend that, please email me, garth@traderscorner.co.za, and I'll send you all the details.
And also just a reminder that people can get a weekly alert from us.
That's right. If you go to traderscorner.co.za, you can click on the free weekly email in the link in the middle of the page there. The sign-up process is very quick and simple, and then we'll send you an email every Tuesday at around lunchtime telling you what's coming up on the show for the week ahead.
Great. Garth, we'll leave it there. Thanks, as always, for joining us. Garth McKenzie is founder and editor of Traders Corner.